Hello and welcome. You're watching Business Plus. Here are the top stories we're tracking at this hour. Wipro CEO Thierry Delaporte steps down. Srinivas Pallia takes over. Resignation comes amid quarters of underperformance and a string of top-level exits. And rising cocoa prices will bite into your chocolates very soon. AMUL chocolates set to get expensive by 10 to 20% in coming days. SEBI fines Finfluencer Ravindra Balu Bharti, asked to pay 12 crore rupees made through unlawful gains, claiming 1000% returns. And Adani Green is set to invest 1.5 lakh crore rupees to build world's largest renewable energy project in Kutch in Gujarat. Adani Group will invest a total of 2.3 lakh crore rupees into renewable energy by 2030. And Vistara is set to scale back operations by 25 to 30 flights daily after recent flight disruptions move to ensure availability of adequate pilot buffer. And the top story we're tracking here on Business Plus, Wipro Chief Executive Officer and Managing Director Thierry Delaporte has now resigned. The software major said it has appointed Srinivas Pallia as the CEO and MD of the company. Now, Delaporte had another 15 months of his tenure as CEO remaining. His exit, therefore, has come as a surprise to the markets. While Thierry's tenure at Wipro saw a significant share price increase, but the growth continued to be a struggle for Wipro over past many quarters. In the third quarter, ending December of 2023, the company reported its fourth consecutive quarterly fall in net profit that dipped 12% year-on-year. The IT major also slashed its revenue growth guidance at both the lower as well as upper end by a negative of 1.5% to minus 0.5%. What do we make of the resignation, the outgoing CEO, and what's next for the company? To discuss that is joining us on the show Shriram Subramanian, is the founder and MD at InGovern Research Services. Also with me is Kartik Malhotra. Before I come to Shriram, Kartik, what are we making of what's happening at Wipro right now?
A number of things, Shweta. Number one, of course, it is a story about numbers. And if you look at numbers between 2020 and the December quarter of 2023, we've seen Wipro growing the slowest in the IT pack. And by the IT pack, I mean the four big boys of the IT player, which includes Infosys, TCS, HCL and Wipro. So Wipro delivered a CAGR of just about 2.34% or so, much slower than the pack. However, on the share price side, Wipro had a positive surprise, and after HCL is actually, it has the share price of Wipro has seen the highest amount of growth, exceeding about 111% or so in the same period. Now, what many journalists out there are alluding to is the fact that perhaps expat CEOs find it difficult to adapt to the cultural sensitivities of a country like India. But I think there is a larger problem at play specifically in Wipro. And that problem is that Wipro has seen, minus Srini, who has just taken over, from the year 2000, in the last 24 years, it has seen 7 CEOs, and out of those 7 CEOs, 5 CEOs have not completed their 5-year terms. That seems to be a Wipro-specific problem.
All right. Shriram is also with us on the show. Shriram, thank you for taking time out. Always good to have you on the show. What are we making of these series of exits from Wipro right now? A lot of employees as well as analysts that we are reading of are saying that this was long time coming.
Yeah, good morning. Definitely, Wipro has a business challenge. If you see Thierry, he instituted a restructuring, he reorganized the businesses. So from that perspective, there are a series of CXO level kind of exits from the company, including the CFO who left last year. So there was a lot of heat on the company from investors to show better metrics. The competitive intensity has only increased because there is a slowdown as far as customer contracts are concerned. So from that perspective, performance in the numbers is not showing up. So even last year, there were rumors that Thierry is on his way out and the board is seeking his removal, etc., etc. But only that they gave him a slightly longer rope of about a year. I think come this financial year has ended now. So I think the results of this year, which will be declared in the next coming fortnight or so, will tell the true story. I think the board has finally asked him to exit.
Mr. Subramanian, good morning. Kartik here. Is this also to do with the fact that Indian IT companies in general and Wipro in particular has not really been able to live up to the expectations of the changing disruptions by way of artificial intelligence? Was this something which was high on the CEO's to-do agenda, which the CEO has not been able to deliver on?
No, I don't think artificial intelligence AI still has made any substantial impact as far as client contracts goes, or the revenues or the outlook goes. So it is just even traditional, I would say, cloud, the mobility, etc. All these traditional offerings post-COVID, which has still definitely increased, and Wipro has been unable to win any of the large contracts vis-a-vis competition. The integration of Capco as a large consulting company into the Wipro as a IT services has been a challenge. I think that has also led to some amount of discontent out there. So all these has mattered to Wipro as a specific problem.
Okay, and do you see this problem at Wipro actually being beyond just Thierry Delaporte? Because in the last 24 years or so, ever since the year 2000, Wipro has seen 7 CEOs, out of which 5 have been unable to complete their 5-year terms as CEOs. Do you see at some level perhaps too much intervention of the board, or do you think this is just the job that boards are meant to do?
No, I think, yes. I mean, the board needs to sort of arrive at some CEO and persist with them. Hopefully, Srinivas Pallia, who is sort of with Infosys for a long while and has seen as a CXO. So hopefully this experiment now with Srini will go a long way. Getting an expat, especially who is based out of France, which is not necessarily the core market for Indian IT services companies. Almost 70% of revenues of any Indian IT services companies, including Wipro, will come from the US. I think that is a mistake that Wipro seems to have made. Having somebody closer to the customer maybe could have helped a bit. So got to see how this pans out, the new CEO.
Okay, you said closer to the customer. That obviously happened to be a problem for somebody who's based out of France. But in the case of Srini, who's based out of New Jersey, USA, is that the closeness to customer given Wipro, like the rest of the IT pack, has most of the clients in the United States?
I would think so. Definitely, if you see analyst commentary and all, it looks like Thierry was not moving out of Paris or France extensively to meet customers and the like. And the CEO's role effectively becomes like a, I would say, an ambassador for the company. Got to go and meet at least 1,500 clients a year. So that doesn't seem to have happened at Wipro. So at least Srini, that would be the expectation, I would think. Bulk of the customers of Wipro would be in the US. Meeting them will be the key, and obviously collective offerings of all delivery capabilities to the existing customers itself is a big thing, I would think. Enhancing the wallet share of existing clients.
All right, and let's also spend a minute on Srinivas Pallia. He is, of course, now the MD of one of the largest IT players in the country. He is a Wipro veteran, has been with the company for the longest. Perhaps it was relatively easy for Wipro right now to decide on who is going to be the successor. He continues to be popular, at least that is what we are reading from what is floating out of internally as far as the board meeting is concerned. How is it a departure for Wipro, which is traditionally seen, I believe, expats as CEOs and MDs, and not so much somebody who's been in the company for a while and is an Indian?
No, so I think that's what Mr. Subramanian is also, trying to tell us, that being close to the customer is pretty much at the heart of any IT company's DNA. And if the CEO is close to the customer, which happens to be the case for Srini because he's based in the US, and that is where a bulk of the business comes from, it is definitely going to serve as an advantage to Wipro. But Mr. Subramanian, if I can just draw you back into this conversation, there are now these instances of sackings or exits happening over phone calls. This was something that started off with startups in India, and now it seems that this whole process of performance improvement plans and emails and feedback, etc., seem to have been given way to by virtue of phone calls being used as a medium to to get senior level people to quit. Is that a new trend that you're seeing?
No, I think COVID changed everything, right? Work from home has become a reality. There are today remote-only companies, even large companies are working remote only. So I would think that is par for the course. So even I would think asking somebody to resign over phone calls would sort of may have become the norm. And this is probably one such instance, if what is in the media is true.
Okay, but in any prior interactions, were there enough notices, enough warnings given to Mr. Delaporte about his candidature as CEO falling short of the expectations of the board? I mean, CAGR is one way to look at it, and Wipro obviously lost clients and delivered the slowest growth. But the share price of Wipro has still not really taken the kind of beating which is commensurate with revenues. So was there pressure of revenues and margins on Delaporte? Because if the pressure was on stock prices, then stock prices seem to have done well for Wipro.
No, I would think there was always some pressure on Delaporte, because even last year, I think analysts at the AGM had also sought that the performance is not up to the mark and the board had to step up. Even as early as just January this year, Rishabh Premji seems to have been quoted saying that the board fully backs Mr. Delaporte. So there was definitely pressure. There were signs that the board or and the company was the shareholders were unhappy with the performance of the CEO, and this was, I think, some time coming.
And, since you talked about Rishabh Premji openly backing and supporting Delaporte just about 6 months ago, does this therefore come as a surprise to you that within 6 months Delaporte has been let go of? Because from what we've been reading in the past, at least in the last 1 year, there seems to be enough and more support towards Thierry's candidature, and he was expected to, of course, complete his tenure.
No, I think the pressure was there. The timing of obviously the exit, or unless there has been any change in the past 6 months, and if Mr. Delaporte has definitely not traveled extensively or won any big contracts in the past 6 months, obviously this was probably as timely as any time, given the fact that we are at a financial year end, and it's better to the stock price, as Kartik said, is sort of at least holding firm.
All right.
Shriram Subramanian, always a pleasure. Thank you very much, sir, for joining in, for your inputs on that story. That, of course, continues to be the headline for now. A major change in leadership at IT major Wipro, which is dominating headlines. But shifting focus to another story that is coming in by the way of SEBI, Ravindra Balu Bharti, a popular Finfluencer with over 2 million followers, has now been asked to return 12 crore rupees, which market regulator SEBI has termed, and I quote, as unlawful gains. Now, SEBI has asked, in fact, Bharti to deposit the money in an interest-bearing escrow account and have also banned him and his wife, Shubhangi, from securities market until further orders. Now, Bharti was running the Ravindra Bharti Education Institute, founded in 2016 with his wife. The company engages in educational activities related to stock market trading, operating via a website called the Bharti Share Market. Now, it is reported that the institute was fronting as an unregistered advisory and was being run by people who were not authorized for carrying out trades. The move against Bharti is a part of SEBI's clampdown on finfluencers to safeguard investors' interest. It does look like SEBI has finally made it clear that if you continue to operate claiming 1000% returns, we will fine you.
I think SEBI has been very clearly walking the talk for the last 1 year or so. We've seen that there has been this overzealous action taken by SEBI against finfluencers that happen to be unregistered investment advisors. And I think what we are seeing by way of Ravindra Balu Bharti is pretty much exactly what we saw with another finfluencer that ran a YouTube channel called called BAP of charts about less than a year ago.
Absolutely.
And a similar process followed. Open an escrow account, deposit money there, whatever seems to be unlawful profiteering on account of sharing investment advice, which as an unregistered investment advisor you're not supposed to. That obviously draws the regulator's ire. And Ravindra Balu Bharti, who holds about 2 million subscribers captive across the 2 YouTube channels, one in Hindi and one in Marathi, which are run by him, pretty much shows the kind of influence he has had, and then redirecting people to Telegram platforms where purportedly some investment advice is shared under the guise of providing education seems to be something that the regulator is rightly so not happy with, and hence this 12 crore rupees to be deposited in an escrow account until the investigation on Mr. Bharti is complete.
Absolutely. And also a warning there to all the Finfluencers who are not registered, who do not have the authority to dole out investment advice, to kindly refrain from doing so. Another Finfluencer there has been now reprimanded with SEBI fine to the tune of about 12 crore rupees. It is, of course, a series of measures that SEBI, the markets regulator, is taking to ensure that people get right investment advices from registered officials. Adani Green Energy has announced an investment of 1.5 lakh crore rupees to scale up its capacity to 30 gigawatts at the Khavda project site in Gujarat's Kutch region over the next 5 years. Now, the managing director for Adani Green has unveiled the ambitious plan, signaling group's commitment to spearheading the world's largest renewable energy project spanning over 538 square kilometers in the barren land in Gujarat, nearly the size of Mumbai. With operations already underway for the 2 gigawatts, Adani Green's vision encompasses additional investment of 50,000 crores in renewable energy projects across several other locations by 2030, backed by Adani's New Industries 30,000 crore rupees investments. Now, plans are outlined to add 4 gigawatts in the ongoing fiscal year, scaling to about 6 gigawatts by March of 2025, an additional 5 gigawatts annually. Now, Adani Green's focus includes not only solar but also wind energy capacity, with plans for power generations commencing later this year. With these developments, Adani's operating green portfolio will reach, or in fact has reached, 10.9 gigawatts, propelling its target to generate 45 gigawatts of renewable energy by 2030. All in all, a comprehensive plan to ensure that renewable energy and the focus and thrust towards it remains intact, leveraging, of course, its own equity, its domestic loans, to ensure a total expense of over 2 lakh crore rupees. That is very substantial, Kartik.
So, Shweta, I think, these intentions have been made clear by not just Adani, but also groups like Tata as well as Ambani, the Reliance family. During Vibrant Gujarat, which happened in the month of Jan, and preceding multiple events where such disclosures have been made. Remember, there's a great alignment with the government's own vision of net carbon neutrality by 2070. And there is an immediate 2030 target to that as well. And the 2030 target looks at about 500 gigawatts of renewable energy. Now, there have been multiple commitments made by leading corporate houses in India. Of course, the front runners therein being Adani as well as, the Ambani family. And this investment is something which was pledged, in fact, in Vibrant Gujarat and coming to fruition now. So, as we see, about 2 gigawatts out of that 30 gigawatts of installed capacity is already initiated, which means it is already, transmitting this renewable solar energy back to the grids. There is going to be another 4 gigawatts to be added in this financial year itself, another 6 gigawatts to be added in FY26. And gradually, till the year 2030, there is going to be an incremental, addition of renewable energy, leading it up to about 30 gigawatts, which is part of the 1.5 lakh crore rupees which the Adani Group has invested. But then, remember, the overall vision is to take up this number to about 45 gigawatts. And for that 45 gigawatts to happen, perhaps the limits of this capacity will have to be extended either by way of another plant or greater investments into expanding this 538 square kilometers of area, which is pretty much a city in itself, and expanding the geographic confines of that to have more installed capacity put in. And that is going to incidentally be about 50% more of the installed 30 gigawatts capacity, which is likely to come at another 80,000 crore rupees or so.
All right. A major push there, of course, by Adani Group to ensure that it ups its renewable energy capacity, will be investing about 2.3 lakh crore rupees by 2030, a substantial sum of money there towards renewable energy. But moving on, Amul chocolates may soon get expensive. Higher cocoa prices are affecting companies across the board, with dairy giant Amul and ice cream brand Baskin-Robbins are also now feeling the pinch. In fact, Amul is looking to hike prices of its chocolates by 10 to 20% very soon. Now, Amul has the largest market share in the dark chocolate space, which uses cocoa butter. The prices are putting therefore pressure on companies, and Amul is likely to pass on that price to its customer. To talk more about Amul's plan as far as its dark chocolate market is concerned, joining us is Jayen Mehta, is the managing director at Amul. Jayen, always a pleasure. Thank you very much for taking time out. I want to first begin by asking, how expensive are the chocolates getting?
You can see inflation to consumer is income to producers in this case also, because there's been a huge increase in the prices of cocoa bean and cocoa-related products internationally. And within India also, we work with a cooperative called Camco, based out of Karnataka in South India. And we are their biggest customers. And they're seeing that increase in the cocoa bean prices, their purchase prices, which were historically for the last 25 years never gone up more than 200 to 50 rupees a kg. They have to pay 800 rupees a kg to the producers.
Mr. Mehta, good morning. Sorry to butt in the interest of time. You know, there's so much to cover about sweet chocolates getting really bitter on their prices. So is the problem largely confined for a seasonal shift with the high temperatures and high rainfall that we've seen in West Africa? Or do you think the short supply is here to stay?
The two things. Internationally, yes, this has been the reason which has been attributed, which has gone up to doubling up and more of the prices of cocoa-based products. In India also, what we discussed with Camco is a lot of farmers were shifting out of cocoa bean production into other plantation crops like curry nut and so on. So there was perhaps a need to give them a compensatory increase in the prices of their inputs and the other costs. But this has been a very irrational increase. I mean, no commodity prices goes up 2, 3, 4 times in such a short time. So we hope things will cool down. But for the moment, as the things stand, there is a real increase in the prices, which we have to unfortunately pass it on in the prices of chocolates, as you just mentioned. We are absorbing the hike for the chocolates we use in our ice creams and beverages. But let's hope the situation normalizes before Diwali and the prices should be at the normal levels.
But if prices do correct, are we going to see even those corrected prices being passed on to the customer? Because once prices rise, Mr. Mehta, companies tend to not bring them down anytime. So are we going to see any impact if cocoa prices of the raw material indeed go down?
The two things. A, we will not fully pass on the increases. Otherwise, it will be very, very high and it will actually be very harsh on the consumers. So it's a calibrated increase which we will be taking. And more importantly, yes, in case of inputs, if the prices comes down, there's no harm in actually reducing the price, because that expands the market and ensures a long-term business for us. So Amul is a brand which works both for the producers and consumers. So we'll be practical on that approach also. It's not that once prices go up, they will never come down.
So you did mention that there aren't enough investments into cocoa farms. And is that a trigger, given that chocolates are a major chunk of your business, not as much as dairy, but a significant chunk? Are there some thoughts on the drawing board, at least of some sort of a reverse integration, backward integration with Amul investing in some cocoa production?
So this integration has been there for last 50 years, because we are in this chocolate business for last 50 years. And we came in specifically because the farmers of that region were exploited by multinationals in the chocolate space who were not giving them a good price. So that's how Amul got into the chocolate space for the first time way back in 1973. So this backward integration in the cocoa bean production space with the cooperatives already exists, and it's pretty strong. So we will continue to engage with them, see that the farmers remain interested in this business. Consumers also buy our locally sourced cocoa beans and the chocolates made out of it, and we grow the market. On the other side, we are making high investments in expanding the plant capacity. The current capacity is being doubled. And I'm sure we are also equipped to gain from the shift in the consumer behavior from the normally sweet, sugary chocolates to the dark chocolates, which we already have a strong portfolio, and we'll continue to grow the market.
All right, and Mr. Mehta, a question therefore at this point is, why are farmers not producing enough cocoa? Is there not enough merit? Is there not enough profiteering by the way of cocoa production in the country? And what are we expecting AMUL to do about it?
No, so AMUL is the front of the market, which is the face as far as the cocoa is concerned, because unlike milk, where we directly have our own farmer base, here we deal with another cooperative. There are a lot of issues in the production of this plantation crop. So the CAMCO has been very actively doing it, expanding its producer base, creating a portfolio, and AMUL, of course, has been steering the chocolate market in a very, very strong manner. But this again is an internationally transmitted issue that we have been facing, and collectively, once the international market also cools down, the domestic demand also stays high, domestic production also keeps pace, then I think we'll have a win-win situation in which consumers will not complain, and farmers also will be happy once the price finds the right equilibrium.
Okay, and there's enough and more conversation around dairy products as well. Come summer, we see a price hike. For dairy, is that going to be in the pipeline? We know that there's not been any sort of price hike, at least in the past couple of weeks. Are we expecting prices to rise for milk or other milk-related products?
Oh, good you reminded me. Let me clarify. There's been no increase in price of AMUL milk since February 2023. So it's more than now 14-15 months when we are seeing the steady prices of milk and milk products. So at the moment, nothing on the cards. So let me assure, it's not just 2 weeks, but it's more than 14 months.
And Mr. Mehta, sticking to the subject of dairy, while we haven't seen price rise, from AMUL come in for the last more than a year, but there is likely to be a shortage of milk supply in summer months, and there are reports which are indicating that the shortage of water could also indeed lead to a lesser yield of milk in the dairy sector. Is that a concern for AMUL at the moment?
No, I would not agree to that. There is enough supply of milk, and there's in fact a very decent volume of milk and growth in milk production and procurement in AMUL and our set of cooperatives, not just in Gujarat but across India. So I would be very clearly, categorically stating there's no shortage of milk and not likely to be any shortage of milk in the coming, not just the summer season but also the festive season and beyond.
All right, Mr. Mehta, thank you very much, sir, for taking time out early this morning. Thank you for joining us here on Newsline. So the word coming in there, as far as AMUL is concerned, chocolates are getting expensive, definitely, by about 10 to 20%. But as far as dairy products is concerned, milk is not getting expensive anytime soon. The prices have remained stable since February of last year, likely to remain stable in the upcoming months and weeks as well.